and the intro.
Sure. And I'll just answer the questions as we move along here. That's no problem.
All righty.
Detroit Business Hub Group Director Nancy O'Neill works with her team of experts. Listen to conversations with business professionals to discover the latest business innovations, insights, and trends. Find out what's hot and what's not in today's business market.
Hi, Mike.
What's happening, Nancy? How are you?
I'm doing well. Thank you so much for coming on the podcast this evening. We're so glad to have you as a guest and one of our newest members of Detroit Business Hub Group.
Yes.
So before we have you introduce yourself, tell us how you found out about Detroit Business Hub Group and what made you decide to become a member of the organization.
Thank you very much for having me, Nancy. Appreciate the opportunity here today. Recent member. We actually know my business partner, John Clear, and Robin Barnes. We're actually friends with Shannon Steele. And you had an event here. I don't remember. Was it in 2021 or was it the end of last year? I don't remember. We blurred together here with this pandemic, right?
January 22nd to, I believe, the 22nd or 23rd.
There you go. Perfect. So we were invited down to one of her events because we know her. And I decided to also join and become a member to see, about business networking, how we can help each other as a group, as an association, as a network. So I thought it would be a good idea just to go ahead and join. And here I am. So thanks for having me.
Yep. Yeah, you got that discount or the free ticket for joining. So I was like, oh man, that was like one of the easiest sales I ever had. I'm like, we need like 10 more Mike speakers.
There you go. Boom, sign me up. I'm done. Let me in.
Well, tell us about yourself. I know that you're a financial planner full-time. How did you get started in the industry? How's business going right now? The whole spiel, your elevator pitch.
Gotcha. Awesome. Well, I appreciate that. So a little bit about me. Well, I got married a year and a half ago. My wife and I, we live in St. Clair Shores. Yep.
Congrats.
Yep. Thank you. Yep. She's in the banking industry. She's in lending at one of the local credit unions around here at Christian Financial Credit Union. So if anybody needs a loan for anything, let me know. My wife can definitely help you out with that. So she's in lending. Yep. And then I got started in the financial services industry. Before I became a financial advisor, I was in mortgages, which was right out of college, which was back in 2006. I was in the 8-year program at Oakland University. No, I'm not a doctor, but I did get my degree. And
wow.
Yeah, but I was on the 8 years. I was on the 8-year plan over there, but I got it done. And then when I graduated from Oakland University, I started off in mortgages. But I started off in 2007, about 6 months after I graduated from college. And then I think we all know what ensued in 2007 and 2008.
Right, the housing crash. Yeah.
Mm-hmm. So the mortgage industry got pretty tough after that. And I wasn't really deeply rooted enough in the industry because I just got started. I was only there maybe a year and a half or so. Right. Decided to switch gears. And then I had an opportunity come across my desk where I could work at Financial Services of America, which is it's independently owned shop over in Warren. It's actually right over across from the GM Tech Center. We're on the 8th floor of America Bank building is where our office is. So I had a unique opportunity to start with them, which I did. And my life has actually changed pretty dramatically after that in a lot of ways. But that's how I got my start there. And then I became friends with John Clear. So that was back in 2008. I started that position the week of Halloween 2008. And then I became friends with John Clear sometime in 2015. When I say the summer of 15, then I started working with him, doing wholesaling and got my real estate license since then. And been working with, real estate as well since then. So.
Okay. Yeah. I saw that your real estate license on LinkedIn. What caused you to get your real estate license?
Well, working with John, networking, we do a lot of wholesaling and off market properties is what we do. But I also decided, we see where, legislation is going and compliance is going with the state. It's always a good idea to make sure that you're protecting yourself and you have the proper licenses. So we wanted to make sure that we had our real estate license because I believe, again, I'm not an attorney or a CPA, so I can't give you tax or legal advice. There's a disclosure, right? I believe that as a wholesaler, you only can, without having a real estate license, you can only sell so many properties per year in the state. Right. So you got to have your real estate license if you're going to do more. So that's one of the reasons why I want to protect ourselves, make sure we were in compliance and that we had our licenses to be able to offer the services to all of our clients. That was the idea. And also, you make yourself more valuable. The more licenses you have, the more that you can offer and network. The more that you can offer your clients, you make yourself more valuable, and use more opportunity for more sales and more revenue is the idea. And with having your real estate license, having access to the MLS, you have access to real comp, you have access to more tools, running market analysis on property, on different properties. I think it just gives us more value. That was the reason why.
Okay, got you. How did you and John Clear connect exactly? Is he one of your financial planning clients, or what's the story behind that?
Nope. So I was already a financial planner, and another friend of mine introduced me to the idea of wholesaling, that whole strategy, which I've never heard of before. So I got Sean Terry early on in that process and that path with the real estate path, and then we had a couple deals. Off market properties we were trying to unload, and I don't know what I was doing. You know what I mean? It was start off, it's okay, let's ready, aim, shoot. You're ready, shoot, aim. You don't aim, you just go ahead and start shooting, right? So that was kind of the idea. Right. We were trying it out. So I didn't really know what I was doing. So I was poking around online trying to find somebody I can network with and connect with. And so I found John Clear, and the rest is history. We ended up becoming business partners at that point too. So that's how that happened.
Okay, and what exactly? I didn't really get to talk to him at the event. What does John Clear do?
John's a broker.
Is he a wholesaler? Okay.
Wholesaler. He's a broker, investor like I am and everything. He's got his real estate license. Also, he's a real estate broker as well. He just passed his broker's license here back in November, I think, of 2020.
Oh, so, that's wonderful.
So
congrats to him.
There's his plug. Yep, congrats, John.
Hopefully he's watching right now. He'll be next to become a member of DBHG.
There you go. Absolutely.
Yeah. So when you told me you were on the 8-year plan at Oakland, what happened? Like, what was your major? Were you part-time? What type of student path is that? Because it's really unique for an undergrad degree.
I was in my 20s. I mean, that's it. I was in my 20s trying to figure things out. And, taking classes, dropping classes, not sure what I wanted to do. I was a bartender. So I was bartending and waiting tables full time. And then I was going to school. And then I ended up taking, I think it was all of 2003. I took off completely. I stopped going. I just didn't know what I wanted to do. I figured I was going to be wasting money on credit hours for a major standing. I didn't know what I was going to do, So I took a year off and just work, save a little bit of money, and then go back. And I ended up deciding to go back. I think it was in 04. I went to like 22 months in a row. I didn't take any breaks. I did fall, winter, spring, summer session, and fall, winter, spring, and I was done. So it was like 22 months in a row I went to school, because I knew if I stopped, I probably wouldn't go back. So I went 22 months straight, and I got my degree, and I finished and actually graduated in June of 05, I think is when I was. Yeah, June of 05.
Okay, and whatever your major was, are you doing any of that right now? Was it like in finances or business or anything like that?
It's a great question. I got a degree in communications, actually, and so I think I do. We all do that every day. Learn how to talk with people, and build business. So at this point too, a lot of people are like, communications degree. What are you going to do with that? Anything you want. I mean, that's the thing. As long as you got the degree, you can go out and do whatever you want. And that was my thing. I just wanted to get my degree and move on, and that's what I was able to do. I didn't get the fanciest degree, engineering degree, all that stuff, but it's not.
Yeah, it's a piece of paper. I mean, it's a credential. It goes a long way. So it is important, even in sales, to have, like you said, as many credentials that you have, the better. And, an associate's or even bachelor's degree does help you out a bit. It just puts you one step ahead of your competition that doesn't have one. So
absolutely. No doubt about it.
Yeah. So back to financial, I actually got a couple of communication. Well, one journalism, one communication degree. So I totally understand. Right. Let's go back to financial planning. Sure. What are some of the hottest products right now in the market? I keep hearing about Bitcoin. I don't know if you want to touch on that. What are some of the types of investments that you actually offer to your clients? Because everybody doesn't sell the same thing. So I'm not familiar with your broker. So I don't really know if you have like a specialty or certain niche in the industry or not.
It's a great question. So first of all, I'm going to give you the best and worst answer out there. It depends.
Okay.
It depends.
Okay.
It depends. Everybody, what might be a hot investment for for one family or one individual might not be so hot for somebody else. So So it's about your goals. What are you trying to accomplish? What's your short-term goals? What's your long-term goals? Depends where you're at. Are you in your 20s? Are you in your 50s? Are you in your 80s? I mean, it can depend largely what's different, what you're trying to do. So it depends on your goals, objectives, what your risk tolerance is. So what might be good for you might be bad for me, and vice versa. So it's really about knowing your client and knowing who you're working with and setting up them best for success based upon what their goals and objectives are, what their needs are. So it really, truly depends. That's the worst answer, but it's the best answer because everybody is different. Everybody is different.
Right.
So as far as Bitcoin goes, I really can't comment on it. Bitcoin is a cryptocurrency, and our compliance department has come out and said we cannot comment on that. It's not actually considered a security. So I cannot tell you good, bad, or indifferent about cryptocurrencies or about Bitcoin. I can't talk about it. Can't give any recommendations on it as it stands right now. That could change down the road, maybe, but as it stands right now, I can't give any recommendations on Bitcoin or cryptocurrencies. We have a best interest planning process. What we do is pretty unique. We're a full service holistic planning firm. So what that actually means is we're one-stop shop. Most places that you're going to go, most advisors you're going to talk to, you're going to get a one-off service. You can go talk to your financial planner. They're going to help you, buy a mutual fund or an annuity or something like that.
Right.
Your attorney is going to help you with a will or a trust, power of attorney. CPA is going to do the taxes for you, right? Your insurance professional is going to sell you a life insurance policy, an annuity, or a home and auto policy, health insurance, whatever, right? You get a one-off service. But the question is, how often in your lifetime, in a single year or a lifetime, do those professionals sit down and talk about you and your family? Probably
together. No, I don't think so.
Never. Probably never. So that's what makes us unique. We have all those services under one roof. So as I said, I'm not a CPA, so I can't offer any type of tax or legal advice, but I have a tax and accounting firm I can refer any of my clients to. I have a legal team that I can refer any of my clients to if we need legal advice or tax advice. We work very closely with them. I have some business clients that I work with that we help them with their payroll, right? We do their payroll form for their company. We handle those things. Yep. We also have an arm of the business that handles all the home and auto insurance, business insurance, workers' compensation, that type of thing for any of our business clients. We have a division that's for health insurance. So anybody who is of age of Medicare or not Medicare, just looking for individual health insurance or group plans for businesses, we're able to help with that as well. Group life, group health. 401ks we help families with or companies with, right? And as far as financial planning goes, any type of stocks, bonds, mutual funds, annuities, wealth management, there's really not anything that we can't offer. We're a broker dealer. We also have a registered investment advisory firm. So as far as real estate investment trusts as well, and a lot of people listening to this might be into real estate. There's real estate investment trusts or something called 1031 exchanges. If you have some clients that are on the fence, if you're not sure what 1031 exchanges, look it up. But it's basically a like any real estate investment transaction, to any real estate investment. So if you're buying and selling properties and you're tired of paying taxes, there is a strategy that's out there that you can move. You sell a piece of real estate, you can move to a fund instead of going out and buying another piece of real estate. What we might find is, an older client who's got a bunch of real estate, single family residence or apartment buildings, and they're tired of being a landlord. And they're in their 80s and they have, hundreds of thousands, maybe $1 million or more in taxable gains capital gains if they go to sell the property. So they're like, I don't want to sell this property, so I have to realize all the taxes on it. But you could do it 31, but they're like, well, then I got to go out and buy another piece of real estate to manage. I don't want to do that. Maybe not. There's a fund out there. There's funds out there that qualify as a 1031 exchange where they hand off the management. They don't have to, deal with tenants and toilets and light bulbs, so to speak, as I like to say it. They can send it over to a fund, do a 1031 exchange. It's a particular way you have to do that. It's a tax-free transfer of those assets. And they can kick the tax can down the street, so to speak. Don't have to pay all the taxes at once. And then they just get essentially an income stream monthly, but a fund is actually handling that investment now. They're not dealing with the tenants anymore. So if it's something that a lot of you are listening to this, if you have any clients that want to sell real estate, but they're afraid to pay all the taxes on it, they can do what's called the 1031 exchange, either into another piece of real estate that they can manage on their own or hire a property management company, or there's actually a 1031 exchange funds that are out there where they can just be hands off and essentially retire and collect the income stream. So that's an option as well.
Yeah, that's great because, a big concern with a lot of seniors is that those income streams coming in. So I'm sure some seniors who might be listening will be relieved to hear that there's a vehicle available for them. I mean, there's other like mortgage products out there, like the reverse mortgage and things like that I feel like some seniors got caught up in and got taken advantage of.
Yeah.
So if they can, I would love to help seniors out with like legitimate products that'll help them versus them getting ripped off.
Well, yeah, I mean, you got to be careful with anything. I mean, I'm not for or against reverse mortgages. I'm just going to say that in certain people, in certain situations, the reverse mortgages can help them. The reverse mortgages for other people are a terrible idea. Just like with everything else, it depends.
Right.
So if the wrong person got put into a program, just like if a person got sold the wrong investment for them based upon their risk tolerance, their goals and objectives, that could be a terrible thing for them. But it could be good for somebody else. So it's the same thing with reverse mortgages. It could be good for some people, bad for some as well. So that's where you really have to know your clients, and you want to make sure you're not taking advantage of anybody, and you know that by knowing your clients and documenting their goals and objectives. And one of the things that we do is we actually put together a written financial plan for all of our clients. It's called an investment planning statement. I'll ask a prospective client, hey, has anybody ever given you a written statement before, a written financial plan before? And they'll hold up their financial statement. And I kind of smile, but that's not a written financial plan. That's your statement. It's not a written plan. So what we do is we actually put together a written financial plan for all of our clients, which highlights their goals, their objectives, their risk tolerance, how much risk they're willing to take, what they're trying to do, with a soon portion of their money versus a later portion. So somebody is, 80, their goals might be different as far as how they need to access that money versus somebody who might be 50 years old, who's still working and looking at retirement, moving forward, not retirement in the rearview mirror. So a lot of different things can happen. We have to put all those goals and objectives down in one document, their tax outlook, their marginal tax rates. Everything goes into one document. That is your written financial plan. It's called an investment planning statement. So if you don't have one, you need to call me because you need an investment planning statement. You need a written plan.
That sounds great.
If you don't have a written financial plan, you need to ask your advisor why you do not have a written plan.
Yeah, for sure. In its most ideal state, can you define reverse mortgages? Because I know some people aren't familiar with the vehicle. So I just want to know if you could talk about it for a couple minutes.
Yeah. So I'm not a mortgage expert. I don't claim to be at all. It's not my area of expertise or main area of focus for me. But essentially what a reverse mortgage is, it's opposite of a forward mortgage. What a forward mortgage is, you buy a house, you got to pay the mortgage company, right? So what you have to pay the mortgage company to live there. So you buy a house for $100,000, you put $20,000 down, you get $80,000 you owe the mortgage company every month, right? You pay your mortgage. Forward mortgage. A reverse mortgage is typically you got to be, I think, at least age 62 or older to even qualify for it. I believe that's what it is. So let's say you own a house free and clear, it's worth $100,000. Keep numbers easy because it's easier for me, right? So it's $100,000, they have it free and clear. They can go ahead and do a reverse mortgage where instead of, typically in a normal situation, we buy a house, right, Nancy? You have to pay the bank to live there. It's a forward mortgage. A reverse mortgage is the bank pays you to stay there. So if you have $100,000 in equity, they're going to go ahead and pay you using that equity in your home to stay there. So where that can help some people is if they don't have any retirement funds, they don't have any IRAs, 401ks, maybe they don't have a pension. Pension has been becoming an antiquated thing. It's not something that's really going to be available moving forward. The older generations had the pensions, right? Our younger generation, unless you're a government worker or you got it 20 years ago, you're typically not going to have any type of pension moving forward. It's an antiquated thing. So people have little savings for retirement. They might have a small Social Security check coming in every month and they can't make ends meet. So where
not enough,
help somebody is they have the reverse mortgage where the mortgage company is going to pay them to stay there, but it uses up the equity in the home. So where it's really tricky is at the end of life when that person passes away, the family might not be aware they had a reverse mortgage. So when that happens, maybe they used up that $100,000 in equity. The family thinks they're inheriting the property. Well, they are, but they also inherited a $100,000 bill that went along with that. That's attached to the property. So essentially they're going to sell that house now and they're not going to make anything on the property. So the family gets really upset. So we do have an avenue. I don't deal with reverse mortgages, but if somebody's interested in it, I have a referral. I have somebody I can refer to for that, refer that out. And I always recommend if you're going to even look at reverse mortgages, get the kids involved. Make sure your kids are a part of the conversation so they understand what mom and dad or mom or dad are getting into. So there's no confusion as far as what's happening moving forward and how that's going to affect the future estate once mom and dad are gone.
Yeah, yeah. And what's really unfortunate too, what if all the equity's gone and the person's still alive, and they can't pay the bill anymore? That can pose another problem as well.
Yeah, I think there's some exit strategies with that. But again, I don't have an area of focus in reverse mortgages. So you always want to talk to a mortgage expert for that information.
Okay. Sounds good, Mike. Well, you talked about your life changing in addition to you getting married. Congrats on that again. Tell us how else did your life change as a financial planner? How do you like that compared to selling mortgages? Which one do you find more satisfying?
Definitely the financial planning, because there's so many different things that can happen on a daily basis. Same thing with mortgages and real estate. No two deals are the same that you're looking at, right? But with financial planning, it's a lot different. It is transaction based to a certain degree, but also we have clients that actually hire us as a registered. So I have my life license, my property and casualty license, which is like home and auto insurance, right? Workers' compensation, that type of thing, business insurance. I have my health license. I also have my series 6, 63, 7, and 65, which makes me a stockbroker and a registered investment advisor. I also have my real estate licenses, and I'm also have a couple designations. I'm a CRPC, which is a chartered retirement planning counselor. So help families plan for retirement. And I'm also what's called the PPC, which is a professional plan consultant. So I have an area of focus and concentration in employer plans, such as 401ks, 457s, 403bs, employer-sponsored retirement plans. So I have that's basically what we cover. But again, not an attorney or CPA, can't give that tax or legal.
Right.
But with the financial planning, I get more satisfaction because it's a fiduciary capacity. So where, the mortgages, it's not a fiduciary capacity. I mean, you got to do what's right for your client, right?
Right.
But your transaction is done. You move on. That's it.
Yep.
Real estate is a fiduciary capacity if you're acting as a real estate agent, right?
Right.
Agent where they hire you to sell the property and you have a listing. But as a wholesaler, it's off market. You're a principal in the transaction is what it is. So as a financial advisor, you're a true fiduciary all around when you're helping them with their insurance, with their, and if you're working with their tax advisor or their attorney, whatever it is, you're still a fiduciary. You're working with them in their best interest to make sure that, they're okay right now and that the kids are going to be okay for generations as well. We have families that, even if it's not transaction based, they'll pay us a fee for our knowledge and time and expertise to work with their families to plan everything out, to review their accounts. I have clients that say, you know what, Mike, I like buying and selling on my own, my stocks and my investments, like handling that on my own. But I want to talk to you once a month. I'm going to pay you to talk with me once a month to review everything. And I have no problem.
You're like a consultant.
Correct. And that's one way that I get paid as an advisor, but you really get to know people and really get to know what makes people tick and really the ins and outs of the family dynamic. So as different as mortgages can be and real estate can be, the financial world, there's so many more things that are going on besides just that one transaction that you're working on that I find a lot. I mean, I find satisfaction in everything that I do, and I help my clients with the real estate needs as well. If they need help selling a property or something like that. So I have just incorporated the real estate as another arm of service for all of my clients in the financial planning world is what I've done. So I don't look at it as, financial planning and real estate. To me, it's just one big thing that I offer my clients, which is nice. So you're helping.
Very nice.
Yeah, you're helping them with insurance. You're helping them with financial planning. Hey, Mike, I just had a grandchild born. I want to start saving for college for them. I'm going to open up a 29 plan or a Michigan Education Trust. How do I do that? So there's always something that you're doing because with mortgages, unless you're looking to buy a house, what are you doing for them? With real estate, unless they're looking to buy or sell a house or a rental property, you only can offer them one thing. Well, with the financial planning, I can do anything for my clients, anything that they want, especially with how we're set up. We have so many options that we have that holistic approach, that best interest planning process. I really, truly feel there's nothing that I can't offer my clients.
Yeah, that's awesome. Yeah, so I used to, I started out after college in the nonprofit sector. Then I wanted to become my own business owner. So I actually became a realtor as well.
Nice.
So I got licensed. I exited the market in 2008 with the housing crisis, like you said, similar to the mortgages.
Yep.
Went back into the nonprofit sector, left that, wanted to try the business thing again. So then I sold insurance for 6.5 years with a major Fortune 500 company. And people are like, well, what are you doing now? Like every time we see you, you're changing your career. So do you ever get that where people, I mean, I know, like I saw you at LinkedIn. I was like, well, Mike, what do you want? What's your specialty? Because you got all of these credentials and licenses and stuff. I'm like, I don't know what to interview you on. Like, what's your main thing?
Right.
So do you ever get that from the public? Like, it's like, I don't know if you just have the financial planning card or if you like pull out an insurance and real estate card or, you know, how that works. Like, how do you think people view you as like a sales professional? Do they just see you as a financial planner? Do they see you as like a business professional wearing all these hats?
It's a great question. I would like people to see me as a reliable source of information for whatever they need, whether it's whether it's real estate, whether it's insurance, whether it's, I got people calling me, they want to put together their estate planning, you know, their wills and their trust. I'm not an attorney. I can't do it, but I can help them sit down and write everything out and organize everything. And then look at too, as we're going through that, because a lot of people think, well, I'm just going to hand this to the attorney and I'm done. No, there's other things that you need to look at as well. You need your documents, your legal documents taken care of. That's the attorney's job, not mine. My job is to go through your estate. And if there's any red flags, you want to know about it, wouldn't you? That's where I come in. So if maybe you don't have enough life insurance, maybe you have a big mortgage and as a young family, right? And maybe there's not a lot of, you know, retirement assets right now. Maybe somebody's 30 years old and they just started off their career. They just finished college late and, you know, they're married, young family. Maybe there's not a lot of investable assets. That's okay. I can help with life insurance. Sometimes it's the biggest key that you can, the biggest thing that you can do to help protect your family, right? You got, you know, young family, couple kids, big mortgage. Maybe you have a lot of debt. Maybe there's student loan debt. What happens if the primary breadwinner passes away? That family's going to be in financial trouble, right? So what do you do?
I would hope that I know what I don't know about. I was just talking to this to a friend about this to a friend. Like, I'm not sure about financial aid, but I thought some debts got erased when the person deceased. I don't know if it's the same with financial aid or not. It's like the person's dead, they can't pay the bill.
That's going to be a question for an attorney. I'm not going to go on the hook for that one, but that's a question for a legal question. But the life insurance is going to help. I mean, that's going to help. A lot of times people don't think about that because they're so busy having kids and working and doing things, they forget to actually plan. And it's important to plan. So whatever it is, maybe it's saving money in your home and auto insurance. You're paying, you know, too much on your auto insurance. You know, I mean, maybe it's just because you've been AAA for 40, you know, for a long time. It's who your grandparents had, who you had, who your mom and dad had, you never wanted to change. Well, we can shop it around with an independent agency and put some money back in your pocket. So it's any little thing that we can help when the planning. That's what I'm here for. And then I want to be looked at as a reliable source of information. I let people know what I do. So maybe there's investable assets, but I helped you save money on your home and auto insurance. But then when it's time to retire, you think about me because I helped you save some money. I helped you plan your estate. So whatever it is, I want people to look at me as a reliable source of information. There's nothing that I can't help them with. I get people that call me about anything. And sometimes I'm like, you know, I really don't know why you got a letter in the mail from True Green about your fertilizer service.
Yeah.
But I suggest you call them, but I literally have clients that call me about anything they get. But I love it because that family looks at me as a reliable source of information for anything. So I'll still take those calls.
Yeah, that's great. I think that's great that you're that versatile. And I was going to say too that people want to work with, you know, individuals that they know, like, and trust. So, and you're especially dealing with money in people's home. I mean, you're dealing with their most valuable assets and their loved ones. So they really want to work with someone they trust. And a lot of people, they just don't have. They might have one like family attorney, but like we have one, but he doesn't really do estate planning. So, you know, attorneys have their specialties too. So I'm sure that you could refer some of your clients to an estate planner because you just don't want to send them to anyone. But like, honestly, almost any attorney could probably write a will, but it's like, do you want any attorney to write a will?
Bingo.
So
Bingo.
I don't know if a lot of people understand that like attorneys have specialties too. They don't all like kind of do the same thing.
If you got a heart problem, you don't want to go see a foot doctor, right? Right? Same thing. No, I agree completely, Nancy. Absolutely. So the good thing is we have access to real estate attorneys, tax attorneys, and estate planning attorneys, other law attorneys. So for those types of situations, we have access to those different avenues of attorneys, depending on what the need is of the client. We would recommend that out. We would refer that out. Absolutely.
Yeah. What do you do with the family, such as like, it's after the fact, like a house is in probate or, they have liens on the home or liens on their taxes and they feel like they have no hope and there's nothing they can do. Like, what type of advice would you give someone who's really in a financial lurch? I don't know if you're seeing more of a trend of that with COVID and the fallout of people's income, or if the types of clients you have, they're more stable financially.
Sure.
Kind of what I'm sure that people are coming to you that are kind of in trouble, or they have to like move some assets around that they probably maybe not have planned on touching because of COVID in the last year.
Sure.
Like, what are you seeing?
Well, it simply depends. But it does happen. So first of all, if anybody has a situation like that, please give my team and I a call. Happy to sit down and assess the situation, see what we need to do. If something's in probate already, there's not much you can do except get it out of probate as soon as possible. So, if you want to give probate a shot on your own, I mean, you're welcome to it. I have some clients that want to do that because they don't want to pay, a few $100s to an attorney to do it, and they just want to do it on their own. It's fine. I wouldn't recommend it.
I know. Like you say, you're not a professional. You're not an attorney.
Right. Write the check, let the attorney handle it and be done with it. That's what I would do and move on with your life. But some people don't want to do that. And that's okay. God bless them, whatever they want to do. Right. But I would get out of probate as soon as possible. And then the next step is make sure you got the letters of authority to be able to move forward and act and sell that piece of real estate if that's what you're looking to do. If there's any type of liens on the property, let us know. My team and I can, do a basic title search with our title company that we work with and find out what are tied to the property. If there's any blight violations, any citations, mortgages, liens, et cetera, as you brought up, Nancy, we can definitely have that looked at just to see. They'll usually, there could be a small fee to do that, but usually our title company will do us a favor and run that for us if we explain the situation. So we appreciate that. But we can definitely take a look at that and see. So if it's something that they need to get out from under as soon as possible, that's a situation where we might have to help them move that property, for something less than what they wanted, would normally sell it for if they weren't distressed. But that's where, with John and I working with different investors and doing those off-market real estate deals, we might be able to, get them out from underneath that toxic asset, put some money in their pocket and be done with it as soon as possible. If they're in a situation where they have some time and they want to try to get as much as they can out of the property, we can list it and we'll use our real estate license and list it and try to get them, top dollar, the most they can for the property to help their family out, pay off that debt, pay off those liens, and put some money in their pocket and move forward that way. So it really just depends on their situation, how much time they have. If they're being foreclosed on, it's March, right? It's coming up. Some people are going to be losing properties here soon, at the end of this month. What's going to happen?
Taxes.
If there's, that's right, exactly. If there's taxes moving into foreclosure, they might not have time to list the property. They might have a matter of a couple weeks and they need to sell it as soon as possible just to get anything out of it. So we have strategies either way. But people have to be reasonable as well as far as what their expectations are if they're put in that situation. So if they're willing to work with us, we're willing to work with them to help them find some exit strategies there.
Yeah, but don't you find with a lot of people, like what becomes an emergency is something that was probably ignored over a period of time and then time kind of runs out.
Exactly.
So a lot of times things could have been dealt with a lot sooner and they weren't taken care of like in a timely manner. And then kind of the bottom falls out.
It's exactly correct, Nancy, just like your health. If you sit around on the couch all the time and eat potato chips and ice cream and then you complain to your doctor you're not healthy.
Right.
But get out there, move around, eat less, exercise, stay active. You'll be better for it in the long run. You're absolutely right.
Yeah. And elderly people know if they have a will or not. They know. If there's a health situation, I understand that, but some elderly people are in great health. They know they don't have a will. They don't want to talk about death. They know that they could be putting their family in a financial lurch. And, that's just kind of a decision that they make. So.
Right. And keep in mind, I love potato chips and ice cream. I'm not saying don't eat it. I love it.
Hey, me too. Sign me up on the list.
Exactly. Cookie dough ice cream. I love that stuff. Anyway, don't get me started. But you're absolutely right, Nancy. You're absolutely right. People don't want to talk about it. I've had people say, I don't want to talk about it. So if I talk about it, I'm going to die. Well,
you're going to die anyway.
Words out of your mouth. Exactly. You're going to die no matter what. You're not going to stop it, right? We all know the cliche. What are the two things guaranteed? Death and taxes, right? We know it's
exactly.
So You got to plan for it. And here's what I tell people when they say that to me. I say, look, there's 3 places you and your family can make these decisions. You can make it in the hospital room, you can make it in a courtroom, or you can make it at your kitchen table. What do you prefer?
Yeah.
Obviously, the kitchen table. So do it now while nobody's emotional. Everybody's here. You can make decisions together. Those are the best decisions that you can make.
Yeah, and none of us really know when our time is going to come, and unexpected deaths are probably the hardest of like a parent, God forbid, a child dying. But
right.
I think I lost my sister at 47 to cancer.
Sorry to hear that.
Yeah, thank you. And her husband, she was married. Her husband actually put a life policy on her because he always thought that she was going to outlive him. And when she died from cancer, everything regarding the funeral was taken care of because of the life policy. Well, when you don't have, the financial planning in place to handle things like that, it just puts that much more stress on top of the planning for the funeral and everything else. And I think families fall out over who's going to get the house when a parent dies. And if all of that stuff is just planned out ahead of time, especially when there's an elderly person that's already ill and you don't really know if they're going to make it or not, it just makes it so much easier and there's so much less stress. I mean, you're already handling a loss, which is bad enough, and to have to add the financial stress on top of that, it just can be unbearable.
It makes it even worse. It's absolutely correct. And you get your proper planning done, and everybody sees what's written out and laid out in front of them as far as who's getting what, who's handling what, how everything's being divided up and the assets being distributed. It really it keeps the family together.
Yes, absolutely. That's what I was trying to get at. Thank you. I couldn't figure out which words or how to say it.
Yeah, people.
That's exactly true.
Destroyed and families fall apart.
Yeah.
Just because the planning wasn't done properly. Or if the planning was done properly, everybody would look at it and look at each other and say, you know what? That's how we would have done it anyway. Even if it wasn't, they have no choice. It keeps the family together by doing that proper planning. And I just want to add, everything you're saying, I absolutely agree with, Nancy, but it's never too young to start planning either. So a lot of people think just when you got to do this planning when you get older, anything can happen at any time. And sometimes it's not death. What if somebody becomes disabled? What if somebody, God forbid, gets into a car accident and they become incapacitated? They're not dead. They're incapacitated. They can't make decisions. Your living documents are just as important. Your patient advocate, your power of attorney for healthcare, power of attorney for financial. It's important to appoint those that you love to be able to make those types of decisions for you. And if you have those documents already in place, good for you. They need to be reviewed because there's been changes. December of 2019, the Secure Act was passed, right? Effective January 1, 2020. So in the last 14 months ago, there was another law change. When I say things have changed, your documents need to be reviewed, I don't mean 30 years ago. I mean 14 months ago. So law change. So if you have your documents in place already, good for you. If it's been more than 14 months since you've spoken to your attorney or your advisor about your documents, you need to do that because laws have changed in the last 14 months. So you need to look at your documents every once in a while. Just because you got them done doesn't mean you're done. You have to keep those updated because laws change, assets change, family situations change, right? So you have to keep your documents updated from time to time. You're never too young to start planning, right? If you're young, you're 25, you got, wife, a husband, kids, whatever it is, you got a house, you got to have some type of plan.
That's the ideal time. Get in as young as possible. That's when you can really start to get well.
Figure it out. Well, God forbid you got kids, right? What if something happens to you and your spouse? Who's taking care of the kids?
Yeah, that's something. I mean, I think that, most parents think that or vice versa. Most parents think that their child would never, die before them. But, unfortunately, tragedies do happen. So it's best to be covered on both ends. And I think, like you said, when things are planned ahead of time, first of all, a lot of times, that person, they might not give you their wishes until they're on their deathbed. And by then, hopefully, you can actually honor those wishes. Right. But I think if you do know ahead of time, everybody's at peace about it, like you said, and people aren't, stressed out and families aren't falling apart over, how assets are going to be divided. Because I think that's just a real tragedy. It's you already had one loss, and then that's just another one to lose family members over money.
Yep.
Because people should be your most important asset anyway, and not things.
People get funny when it comes to money.
Yes, they certainly do. They definitely do.
I just made that up, just so you know, right now. Like I just made that up.
Well, there's a song or a poem or something that says "No money, no honey." So yeah, we heard that one before too. So yeah, money has definitely put a strain on a lot of relationships. Money and health. Those are two important things that you have to have. And I would say, like, your greatest asset besides people is your ability to work. Like, don't you agree? Like, that's your best source of wealth, until you can get to a certain point where your money starts making money for you. But usually your best source of wealth is like employment and having the ability to work. So yeah, disability and unemployment can really be like detrimental to your finances.
There's the other thing right there too. You get a younger family too, thinking, "Oh, everything's okay. I'm working." Talking about always an opportunity to be able to help a family. What do your employee benefits look like through your company where you work at? Do you have disability? Right. You got a great big house. You have a big mortgage payment. You're making good money. You can provide and pay for it. That's great. God forbid you get sick or you get hurt. How's that mortgage getting paid? How are the bills getting paid? Do you have disability insurance, short-term, long-term disability? Do you have something like that lined up to take care of your family? God forbid that you get sick or get hurt. So there's always an opportunity to be able to help a family out to make sure that they're on the right path, because most people haven't done most of their planning. Most people have, even the people that think they have, it's probably outdated. It probably needs to be looked at. People set up a series of mutual funds back when they were 40. They're now 80, and they think those mutual funds seriously, people think those are still okay. Maybe they are, but maybe they're not okay for their situation anymore. Because when you were 40, you had certain goals in mind. Now you're 80, you might have some different goals. But people sometimes don't understand that. If they don't have the proper guidance, they set it and forget it, and they never come back to it. So things.
I didn't mean to cut you off, but I would say that's a salesperson problem, because the salesperson really needs to reach out to their customers and be like, "Hey, it's time for your annual plan." And it's not, sometimes a salesperson needs to put on an advisor hat and say, "Hey, I want you to come in. I want to take a look at your plan." Like, even if you don't make a sell off of it, so what? You're keeping a customer. So it's like they say, it's better for you to keep a customer than for you. It's harder for you. I say it's 10 times harder to get a new customer than to keep the customers that you have. So you definitely want to keep the customers you already have happy. And so don't you think they should be reviewing that person's assets or products at least once a year?
I think they should. And a lot of them do. But there's a reason why a lot of times that's not happening. And people become an orphaned account, or what we call a house account. And that's where you look at your statement and you see, I'm with XYZ brokerage firm or whatever. And you see the phone number and it says financial representative. And it just gives you an office. Or it just gives you a toll-free number and there's nobody's actual name there. Or there's a person's name there and you've had this account for 10 years and this person's never called. You have no idea who you are or who they are. That's called an orphan account or a house account. Typically that happens because you don't have enough invested. A lot of the big major firms, I'm not going to name any names, but a lot of big major firms out there will not touch you unless you have at least $250,000, in some cases $500,000. If you don't have at least that amount of investable assets, they don't want to take on the risk. It's not worth a risk for them to give you financial advice. They're not charging you for any advice. They're not charging you any ongoing management fees, but they're not dealing with you. Unless you have a certain level of investments, they'd have no interest in actually helping you. So they're totally fine if you take those assets and move them elsewhere, because unless you have 250, and in some cases at least $500,000, 500,000, you're not getting any advice from them, and you are an orphaned account or a house account, and you're not going to get a phone call ever for any type of review. So where we're able to come in is, I tell people we're able to help with any type of situation. No matter what your investments. I talked to a client here, a prospective client here last week. She got $20,000. I talked to the advisor at the bank, and he said I have to have at least 25. Now there are some situations where it's less than that. Talk about some of the big boy brokerages, you know who they are. 250, 500, they won't touch you. Some of the other smaller firms, typically 25,000 is where the minimums are. This client said I have 20, and my guy at the credit union or the bank wouldn't even talk with me. He said, you got to have at least 25. I can't do anything unless you have 25. I said,
think that's terrible. I mean, especially if the person's already a customer there. That's like a slap in the face. It's like, oh, well, I guess I'll need to stay here then, because you a lot of people just want convenience. They want to have all of their products in one place. And when you tell them, like, you don't have enough money for me to even be bothered with you, it's like, okay, well, I'll just take my little $20,000 and go somewhere else.
Correct. So that's where we come in. You're exactly right, Nancy. So that's where we come in. And so everybody I meet, our minimum one upfront investment's $1,000, or if you don't have $1,000, it's $50 a month. Those are the minimums. That's
not bad. That's very reasonable.
Those are minimums, right? So we don't need to have those higher amounts. I mean, it's the reason is because the licenses that we have and we make recommendations, you're at risk because you're making recommendations. You have a liability, just like as a doctor, if somebody's a surgeon and somebody's under the knife and you're operating, there's a certain liability there that surgeon has because he's operating on you, right? We're making recommendations. We have a certain level of responsibility, a certain level of risk that we carry for those recommendations. And just like a doctor, we have errors and omissions insurance, insurance. The agents have that as well for that type of thing. But a lot of the big time brokerage firms, they don't want that risk at all unless you have certain minimums to invest with their firm. So that's the situation.
It seems like more investment though, like more risk. So it's like, do you want to deal with like the little small puppies, or do you want to deal with some big dogs? So
that's the thing. If they're taking the risk, they want the larger money if they're going to be taking on that risk. For the smaller amount of money, they don't even want to take the risk. We'll take it on. So if you're find yourself in that situation where your advisor called you and said, I can no longer help you because you've fallen below the $250,000 minimum. I can no longer give you any advice, or you're not getting a phone call, or you look at your statement and say, geez, I just see a toll-free number here and no name. You are what we call an orphaned account. Nobody is looking at your account except for you. Call me. Terrible. And I'll be happy to do a review of your account and see how we can help you out.
Yeah, but they're still making interest off of your little $20,000. I mean, look at how many little customers they have that are orphaned that they have no idea what's going on. They probably think they're still being serviced.
Correct. The little guy loses out because you don't have enough money to pay for fee for service. You don't have enough money to get that service, to get the information you need. So how are you supposed to potentially grow those assets? How are you supposed to, thrive and make sure those accounts are working properly for you if you don't have enough money to pay for advice?
Absolutely. Yeah. Well, you actually taught me a lot about what's going on in the financial planning industry. As you know, with DBHG, we work with real estate agents and those in the financial services industry, such as insurance and financial planning like yourself. And for whatever reason, since the beginning of the year, we've been very heavily real estate heavy. So I'm glad that you were able to join us today and give us some financial planning advice. Like I said, you taught me a lot of stuff too, because I had no idea that type of stuff was going on with orphan accounts. That's like really discouraging.
Yep.
So I'm glad that you work with the little people and you haven't forgotten about us out there. And
work with everybody.
Yeah, we don't want to leave the big people out either. But yeah, if you guys how can people get in touch with you, Mike, if they want to take advantage of our conversation today, if they want to just get some advice, or I don't know, do you offer free consultations? Like, what do they do moving forward?
Thank you, Nancy. Appreciate that. Yeah, we offer free consultations. Absolutely. It would either be with the COVID environment we're in right now. We're not really seeing any clients because of that. So it would either be a conference call or a virtual meeting, just like this right here. We can see each other over the internet through Zoom or whatever. We use Ring Central, but whatever it is, we'll make it work, or a conference call. Free consultation. And what we call that is a fit call, right? We want to make sure we're a good fit for each other. We want to make sure that, our firm is a good fit for you and your family, or your business, depending on what you're trying to do. And that your family or business is a good fit for us. Because there are times where, even if somebody does have investable assets for whatever reason, for whatever they're looking for, it just might not be a good fit for what we're trying to do. We want to make sure it's the right seat on the bus, so to speak. So we do a fit call. We have a conversation, half hour, maybe an hour, something like that, and make sure that it's a proper fit. And we just go over some basic information on that initial consultation. You can bring, whatever information out to that consultation, or don't bring anything at all. Some people are like, I don't want to show you any of my stuff yet. I just want to talk to you. Fine, get comfortable. I get it, because you want to make sure you're comfortable with who you're working with, or this isn't going anywhere anyway. I'm totally fine with that. But to get a hold of me, email or a phone call, text is okay too. My phone number is 586-899-3522. Again, 586-899-3522. Or you can email me at mspica@fsa-1.com, which is my first initial, my last name, mspica, SPICA, at F as in Frank, S as in Sam, A as in Apple, -1.com. And I'll be happy to help in any way that I can with any of the services that we offer.
Okay, -1.com.
Yeah, numerical. Number one. Yep, okay. You got it. Yeah.
Okay, and give us your work number again or your cell phone, the 586 number, because I'm putting in the chat box as we speak.
No problem. Thank you. My my cell phone number is 586-899-3522.
3522.
3522. You got it. Yeah.
Okay. I do have one comment from DBHG friend. He's not a member yet and a personal friend too. And he says, great job, speakers. What type of stock and fixed income strategies are offered? He wants to know what type of stock and fixed income strategies are offered.
That's a great question. So there's a lot of different strategies that are available. What we do is we can build out customized portfolios for whatever your goals and objectives are. So if you're looking at, so you got to be careful with fixed income right now. I'll keep it short, Nancy. I know we're coming up on about an hour now, but there's a lot of fixed income strategies. Traditional sense, most people think fixed income isn't going to be as volatile. You have to keep in mind right now that we're pretty much in a zero interest rate environment. So to go out and get any type of yield for fixed income, you're taking on at least a little bit more risk than you normally would in past years because interest rates are so low. So to go out and get that higher yield, get that higher interest rate on the fixed income, on the dividend yield, you're taking on a little bit more risk than you usually would. So it's a little bit, not a lot of it, but a little bit of a different conversation these days than it used to be, because you think fixed income, you're thinking more conservative. I would still generally feel that way, but you're taking on a little bit more risk these days with those fixed income strategies than you used to be because the interest rate environment that we're in right now. What we do is we go through what's called a SMART means tested program. We look at your goals and objectives and your risk tolerance, and we use Morningstar and run Morningstar is a rating system for mutual funds, et cetera. And we run based upon your risk, your standard deviation, and type of performance you're looking for. We put together, a wide variety of different documentation and reports showing you how these investments have performed, showing you the fee structure, and even back testing it through the financial crisis, the tech bubble, and most recently the coronavirus. About a year ago right now, the market was falling apart or getting ready to, right? We back test it and show how it would have performed if you held these portfolios during those times and what the projection is moving forward. Of course, past performance is not indicative of future performance. I think we all know that. But basically what it comes down to answer the question as best I can, is, again, it really depends on what you're trying to do, your goals, objectives, and your risk tolerance. The best way to answer that question on an individual basis is to set an appointment with me. I'll be happy to walk you through our best interest, goals-based planning process to figure out what might be right for you. Because what might be right for you might not be right for your next door neighbor. So we have to talk about that. But there's a lot of different strategies that are available. Or full service wealth management. Even if you want to do some things on your own, we can show you how to do that by utilizing some really, low cost ETFs, index funds. We can show you how to do that as well if you want to do it on your own. I can even walk you through that process.
Yeah, Reggie is Reginald. He was at the event as well. He's actually broker licensed as well. So I think he's just trying to figure out. I think he just kind of wanted to, iron sharpens iron, to just get your opinion on that.
Sure, yeah, absolutely.
Yeah.
Unfortunately, everybody's different. I can't answer the question until we sit down and talk.
Right. Well, thank you so much, Mike, for taking an hour of your time to spend with me today. I know you're really busy. Sure. Any final comments that you want to add about DBHG? I hope you'll come out to our upcoming event, April 23rd. With our upcoming speaker, Kimberly Naylor. Is going to be right here at the same location at Incubizo,
sure.
From 4 to 6 again. So hopefully we'll see you there and you won't be a stranger. I'd love to have you back on the show again sometime before the end of the year. So if you have a new product or anything that you want to roll out or something that you're really excited about sharing with our community, feel free to email or call and let us know when you'd like to come back on.
I'm happy to come back anytime. I mean, if next time you have me back, if you want me to focus on a certain subject matter, maybe talk about estate planning or taxes or something like that, and do more of a presentation, I'm happy to do that. Absolutely.
Okay. Yeah. We do have coaches through DBHG, and so they offer teachable courses. So if you're interested in kind of doing more of like a teaching style format or lecture style format, definitely let me know that too, and we can definitely start putting a course curriculum together as well.
I'm open to that. Absolutely, I'm open to that for sure.
Okay. All right. Well, thanks so much. Like I said, the organization right now is extremely real estate heavy, so we definitely want to expand our wings and move more into financial services, or certainly offer more than we are offering right now through the courses and through the events that we have throughout the year. So I'll definitely follow up with you about the teachable courses as well.
Sure. Sounds great.
Okay.
Appreciate it, Nancy.
Okay. Have a great evening. Thank you so much for coming on again.
My pleasure. Right. Thanks for having me. Thank you.
Okay. All right. Bye-bye.
Detroit Business Hub Group Director Nancy O'Neill works with her team of experts. Listen to conversations with business professionals to discover the latest business innovations, insights, and trends. Find out what's hot and what's not in today's business market.